that we're in a position to maybe see a bounce over the next week or two, potentially back to 25,000, maybe as high as 28 plus thousand, before, unfortunately, we probably see a little bit more downside.
Hello, and welcome back to the Daily Crypto. Today, we have Gareth Soloway as he tells us his predictions for the Bitcoin industry come 2023 and why he expects Bitcoin prices to continue falling till it reaches the $12,000 benchmark, following a brief bounce in the $20,000 range. Gareth Soloway went on to explain, using charts and technical analysis, that 20K represents Bitcoin's short-term price floor, as a bounce of 25,000 or a 28,000 likelihood is expected this week or the week to come. Bitcoin's price fell as low as 18,000 over the weekend, and the S&P 500 entered a bear market and investors fled cryptocurrencies. The largest cryptocurrency made a swift recovery of about 5% at the start of the week and remained above 20,000 on Thursday, June 23rd. Some forecasters have already called the bottom, predicting that prices would climb following this weekend's drop. But that is overly hopeful. Others are more cautious, arguing that we cannot assume the worst is over until inflation declines. Simply put, investor concerns are totally rational in the near run. Not only has the value of our portfolios been crushed, but prices might fall even more. Without further ado, let's get right to Gareth Soloway's Bitcoin price forecast. Don't forget to like and subscribe if you love the content we provide on this channel.
We've just seen that big flush that took us below 20,000 to about 17.5. And then very quickly, the next day, we recovered back above the 2017 highs. So I think for me, that's the line in the sand right now, is that you can go below a previous pivot high, a major level like that, but the recovery is important. If we didn't recover and we were still below that level, it would signal near-term weakness. Right now, I actually think that we're in a position to maybe see a bounce over the next week or two, potentially back to 25,000, maybe as high as 28 plus thousand, before, unfortunately, we probably see a little bit more downside.
If May was Black Month for cryptocurrencies, we know that June isn't getting any better. In just 15 days, Bitcoin loses 45%, breaking Gareth Soloway's $20,000 support level of 2017, and the crypto space, which is systematic, could sink Bitcoin. In the decentralized financial sector, DeFi has entered a crisis. Last week's sales pushed up more than 70% of the record high of 69,000 in November 2021. Gareth Soloway still believes there is still room for more upside, even as all signs indicate that the market may bottom out. However, inflation is the first of these assets, and many are cautious about forecasting. Cryptocurrencies are known to have little immunity. Since Bitcoin hit a record high in November 2021, the value of the world's most popular digital currencies has fallen by about 70%, and rivals are suffering. Like Dogecoin, Ether is down about 70% this year. Proponents of Bitcoin have always argued that digital currencies are inflation hedges, but they don't really behave that way. As the stocks of tech companies plummet, so does the price of Bitcoin.
So let me just show you guys this. So if you see this drop here, this kind of vertical move, if you take that distance here to this low, which was the Terra Luna collapse, that distance is about $14,000 on Bitcoin from this high to this low. And then if you look at this sideways consolidation and you take this high right here to the low down here, this is also $14,000. In the world of trading, we call that a measured move, and it usually denotes a short-term low because you've kind of completed the equal distance of the move. So just little cool things like that, how the symmetry of the charts shows up. So those are little factors that I'm looking at which are positive for Bitcoin, at least in the next few weeks, maybe next month. And then really in terms of resistance, if we do get a bounce, you have to respect this low right here, this 25 and change low. That's going to be resistance. And if you continue up, this is really, I mean, look at all this choppiness right here.
And
if
like
price comes up underneath, that's going to be significant resistance. So I would say this is my low end target in the near term here, and this would be my high end target. At which point, you know, I'm still in the camp that we probably do have more downside, just because I don't think we've seen full out despair. People are upset, they're hurting, it's horrible.
Despite being bearish in the short term, Soloway emphasized that he is looking further ahead. He sees Bitcoin reaching 25,000 or 28,000 within a week or next week.
Right now, there's kind of this time factor involved where we got below that previous 2017 high. We recovered with a reversal candle, which is a technical bullish signal. And now we've just been going sideways. It's been very, very eerily quiet in the crypto markets, but we've started to see some altcoins starting to pick up. You know, for instance, we've seen Polygon have a monster move. In fact, let me bring up that chart here on Polygon. Okay. Let's take a look. So you can see this move on Polygon. It's just been ripping up to the upside. You know, it got as low as about 30 cents. So it's up about 100%. And then if you look at other names, like even Solana has been showing us some relative strength, breaking up here off of these recent lows. So even though Bitcoin hasn't started to really rip to the upside, some of these more beaten down altcoins are, and I look at them as kind of a little bit of a leading indicator. I think if you go back to Solana, for instance, when Bitcoin was topping, this was still holding up relatively well before it really started to fall dramatically. So it makes sense to me that these could be showing a little bit of a risk on kind of take on the crypto markets. And that could be telling us that Bitcoin could likely get a bounce in the next week.
According to Gareth Soloway, the crypto market has recently been monitoring the stock market more closely and has noticed how it is even more linked with the macroeconomic factors. According to Gareth, Ether has been following in the footsteps of Bitcoin.
Just talking about the 25,000, maybe 28,000 target, let's do some technical analysis work here. So one of the reasons why I thought that this was a short-term bottom was because of a couple factors. Number one, the obvious one is that we pierced the 2017 highs, right? So just naturally, that's going to be a massive level where people are saying, okay, maybe this is the low in the charts. But more importantly, you see this down candle here, and then look at how we broke below and we closed below that 2017 high, but very, very quickly we reversed right back up. That's what we call a bullish reversal candle. So in technical analysis, that's a positive. Now you're just going sideways here. And one of the things I'm paying attention to is the stock market, because it also can be a leading indicator of risk on. So if you think about the risk levels, people in general will say to you, okay, you know, gold is the least risky, you know, then let's just skip over some assets. But then you get to the stock market, the S&P stocks are kind of the next level, then tech stocks are the next level of risk, and then Bitcoin is like the highest level of risk, right? I mean, when you see 80-85% corrections in bear market, that's high risk. So we've seen now the stock market starting to catch a bid. Assuming that holds, it's telling us that people are coming back to risk. At some point, they will finally take a stab and say, okay, we've made money in the NASDAQ. Now is the turn to make money in crypto. And I think that's where you get this push up.
In an effort to battle inflation, the Federal Reserve recently boosted interest rates by 75 basis points, the highest increase in 3 decades. Despite this, inflation has continued to rise, and the crisis in Ukraine has contributed to heightened market instability.
You'll see the Federal Reserve historically not do a lot of crazy monetary policy just before elections, whether it's a Republican or Democrat, because they don't want a market crash or anything to be looked at and said, oh, well, you guys are the reason this happened, right? So they kind of like to remove themselves out of the equation. Now, having said that, I think the tightening has been on purpose to bring down inflation and mainly oil, right? So tightening of interest rates slows the economy. That's what it does, because it sucks money out of the system. So less money to spend, less money to go around. It slows the system down. And basically that'll slow the demand for oil. So oil comes down. We've already seen oil this week. I think the high was around $124 a barrel, and we're right now around 106. So you're starting to see oil come down. My guess is oil will continue to come down because the economy will continue to slow. So I think that's part of the equation here, where once you get inflation to start coming down, the Fed will have that leniency to kind of step back for a few months right around those midterms and kind of recognize or see how things are playing out. And then really what I honestly expect is by year end, the US economy is borderline recession. Early 2023, we're in a recession. And then you see the Fed potentially, especially if inflation starts to come in back to 4 to 5%, then you could see the Federal Reserve actually start to loosen again.
Bitcoin has now been in red candles for more than 7 weeks in a row, a cryptocurrency record, while Ether is at its lowest level since 2020. While the drop is distressing for crypto investors, it is not wholly uncommon. What is uncommon is the collapse of the Luna cryptocurrency and its accompanying Terra USD stablecoin, dubbed UST. The UST coin is supposed to be worth $1 at all times, but it was depegged on May 9th and is subsequently dropped to 7 cents. Then there's Luna, Terra's ecosystem's focal point. Its value has plummeted in one of the most spectacular crypto collapses ever witnessed. Though Bitcoin and Ethereum have had ups and downs since then, Gareth Soloway believes that Ethereum will have a higher bounce rate than Bitcoin in the coming weeks. According to Gareth Soloway, the next bull run is going to be the one of mass adoption, where the public will realize the end game of the US dollar.
As we get into, so wherever Bitcoin bottoms out, whether it's 17.5 where it was, or 12 or 10 or 5 or who knows where, I do think the next bull run will be the big one. And I know that sounds crazy because we've already seen big runs in Bitcoin, but my guess is when the market starts recognizing that the Fed is going to kind of do this whack-a-mole with unemployment and then inflation and then unemployment and inflation back and forth, there's no good end to this. And that's where Bitcoin is going to be, that next big bull run that easily takes us north of 65 and maybe 100, even a 250 or 500,000 per coin. Now, again, I think by this point, a lot of the alts are gone. You probably have a standard kind of maybe 50 cryptos that are now surviving. The top couple will be the blue chips like an Apple or a Microsoft type play. Those would be Bitcoin and Ethereum. And then we'll have to see how it all plays out after that. But I do think the next run is going to be the run of mass adoption, where the public starts to recognize the end game for the US dollar and really for central banks around the world that are just doing this and repetitively printing every time we get into this mess.
Do you believe we'll see an upside price target of 25,000 in the coming week, given the long-term rise? Comment down below and don't forget to like and subscribe. This is The Daily Crypto. We'll see you in the next video.